Hey, what's up, my friend? So, do you know less than 1% of traders pass a prop firm trading challenge? So, if you're one of these traders who's thinking or considering, or maybe, I would like to join this trading challenge, Rayner, then this video is for you because you'll discover the truth behind these prop firm trading challenges, and it's not what you think. So, what exactly is a prop firm trading challenge? To break it down, it's simply number one, you need to pass a trading challenge. It's a paid challenge, so it can range from like $100 all the way up to 1,000 or more. So why is there a price range? Is because depending on the type of account that you want to trade, the larger the account size that you want to trade, the more expensive, right, the trading challenge will be. Okay, so once you pass a trading challenge, and if you do pass, you get verified, you will then get to trade the firm's capital with a profit sharing scheme. Some could be 50-50, then they increase up to 70, 30, 80, 20, 90, 10, etc. Okay, so sounds good, right? But here are a few things that you're probably unaware of. Now, the first thing to know is that you are trading on a demo account, right? Don't take my word for it. This is actually shared on FTMO website itself, okay? So let me break it down, what they're trying to say over here. So you can see over here, this is pretty straightforward. After a client becomes an FTMO trader, they will be provided with a demo account with fictitious capital. So basically, after you pass the trading challenge, you will be provided with a demo account with fake money. Then this second portion here, an FTMO account is an account with fully fictitious funds, however, with real market quotes from liquidity providers. So basically, a demo account with real pricing feed from the liquidity providers. Please note that for an FTMO account purposes, liquidity providers do not provide us FTMO traders with any real money or liquidity, only with the market quotes. Our clients therefore never actually perform any trades on the live markets. This is as in your face as it gets, right? As an FTMO trader, a verified trader, you will not be trading any live money at all. But it doesn't mean that you're not going to get paid, right? They actually do pay out traders, but this is something that you want to be aware of, that you're trading a demo account. So over here, you can see what it says over here. In a separate process, FTMO also trades on its own account outside of the FTMO platform with real financial means, meaning with real money on the line. Okay? While performing its own trades, FTMO may also use trading data obtained from its clients' FTMO accounts. FTMO continuously monitors and analyzes the trades executed by FTMO traders in the demo environment and subsequently evaluates whether trades will be executed for their own account. So what this means is that, yes, you might be an FTMO trader, you might be a profitable one. So it's now up to FTMO, up to their discretion, whether they want to copy your trades onto their live account that trades the live market. So it's up to their discretion. They may or may not want to do that. And again, I'm not sure whether they will tell you or not whether they're copying your trades or not. Okay. So this execution occurs without any impact on FTMO clients and their simulated trading. These two processes are separate, and in no way is the FTMO trader influenced by FTMO trading. So yep, there you have it, right? I think this is as clear as daylight. You are trading on a demo account, and the firm FTMO may or may not copy your trades in the live markets. Again, if you think about this from a business point of view, a firm may not necessarily want to copy all their profitable traders or verified traders in the live markets, because there's still inherent risk involved. If they go into a drawdown, their live account with real money will also go into a drawdown. So that's something that that's the reason why they're not going to copy every verified trader, right, to the live markets. Maybe those really exceptional one with very low drawdown and almost near guarantee, winning rate or profitable week, profitable month, then maybe they might consider doing that. Yeah. So the second thing to take note of is conflict of interest. And before I talk about conflict of interest, right? So this one over here, the source is from FTMO. I can't say the same for other prop firms challenges, right? But I believe most of them operate in a very similar manner, right? Because their business model is so similar. So again, right, this is what I've taken from FTMO. It's pretty much published publicly, right? But I believe other firms also operate on a very similar model. Second thing, conflict of interest, right? So why is that, right? So here's something to share with you. So this is taken from Finance Magnets. So let me break down this first section over here. So the business of running TFF. TFF stands for Trader Funded Firms, right? Basically prop firms, is lucrative. These companies have multiple sources of revenue. However, their main source of revenue is from traders' evaluation or audition fees. So basically your trading challenges, this is their main source of revenue, but not the only one. Okay, they also generate revenue from add-on, right, fees, like you can, pay extra money to get a lower profit target, or even to increase your allowable drawdown. So we'll go into the requirements of this firm later on, but basically you can, put in a little bit extra money to make your trading challenge less stringent, less strict, right? It's like, you taking up a driving lessons, then you paying your instructor, hey, I give you another $200, make my driving test, less stringent, right? Maybe in Singapore, the moment you hit 20 points, right, you will fail your driving test. So maybe in this case, you pay him another $200, you will allow you up to maybe 25, 30 points, right, and you can still pass the test. So something along those lines, yeah? So another supplemental income source of these firms, right, are the mentorship program fees. Some firms offer this complimentary, meaning for free. All right, then they have introducing broker partnerships with retail FX brokers. I'm guessing this one maybe, I'm not sure how this one works. Data reselling, markup of data-related fees, or maybe increasing the spread, yeah? So final section, although these firms, right, these prop firms take a small part of the profit from the traders, it is rather an optional and rare source of revenue. Other optional revenue sources for these prop firms are reselling of trading data, which may occur sometimes without proper disclosure. So all in all, what it's trying to say is that the main bulk of their revenue, right, comes from the trading challenges. And if you think about this, right, the more people that take the challenges and fail and then keep retrying, the more money these firms is going to make, because that's where their bulk of their revenue come from. So in other words, for my business to thrive, I hope that you feel the challenge over and over again and keep retaking over and over again, and that's how I make my money over and over again. Yeah. So this is where the conflict of interest lies. Okay, and we'll talk about later, whether, is this a scam and stuff like that. But, for now, this is where the conflict of interest lies. And also, I've done a little bit of digging and I found this on Reddit, right? So this is actually the data of one of the prop firms out there. I'm not sure which firm it is, but you can see that in November, I'm not sure which year, right? It had opened about 5,700 new accounts, 5718 new accounts. The total amount paid to traders, right, throughout I think the firm's existence is 2.8 million. I have no idea how many years the firm has been in existence. 5 years, 3 years, no idea. Most traded pair is gold. Least profitable pair, it's pound yen. Most profitable pair is gold. Not sure why. So the past, okay, this is important, right? Pay attention to this one, right? So I want you to look at this over here and see the statistics for yourself. Phase 1. So prop firm challenges, they have multiple phases. The phase 1, 10% of the people pass phase 1. Okay, phase 2, 24% of the people would pass phase 2. Okay, meaning 24% of the 10% that pass phase 1. Okay, and then finally, those who actually reach their first profit split is only 3% of the people from phase 2. So let me break this down, right, in mathematical, giving you an example. Let's say 10,000 people take up the prop firm challenge. Okay, and only 10% pass phase 1. So this means only 1,000 people pass phase 1. Okay. Out of these 1,000 people, only 24% of them will pass phase 2. So that is 240. Okay. And out of these 240, only 3% will get a profit split. So 3% of 240 is about 7.2, which is about 7 people. 7 people out of 10,000 who take up this prop firm challenge will actually see or get a profit sharing based on their own trading. So if you think of it, the stats, right, it's pretty done stacked against you. Less than 1%, less than 0.1% of the people will actually receive a payout. Okay? So, of course, right, this source is from Reddit, may or may not be real, but I'm just thinking this logically, and I would lean more towards being real than not. Because if you think about this, the industry average for traders who are being profitable, you know that 90-95% of traders fail in the long run. So when we mean fail, right, it means that they lose money. So 90-95% of traders will lose money in the long run. So if you look at this later, as you see later, the prop firm challenges, right, their requirements is even more stringent than just losing money, because you can actually make money in a prop firm challenge and still fail the challenge. Okay, so this means the challenge requirements even more stringent than just losing money. And 90-95% of traders already lose money. And now this challenge is even more stringent than just simply losing money. Because later, as we'll see, you can be a profitable trader. You can make money and still fail the challenge. So if 90-95% of traders will lose money, and the trading challenge is even more stringent than just simply losing money, then it's no surprise, right, that these statistics, right, will hold some merit over here. 1% or less than 1% of the people will actually receive a payout. Yeah? So now the question is, why is it so hard to make money from these prop trading challenges? Let's find out. Oh, actually, before we get to that, I want to share with you another piece of information I found. You can see over here, right? Let's have a look at this, right? So you can see that a lawsuit against my forex funds, right, 310 million in fees between November 2021 and August 2023. That's crazy. With a net income of approximately 172 million, 135,000 clients. Program fees range from $200 to all the way like $5,000, right, for max funding of $2 million. So you can see that these firms, right, they made like, wow, 172 million just from these trading challenges. So another one, rare reports by regulator or public tax filing, right? So a European-based prop firm paid about $10 million in taxes in 2021 and about 23 million in taxes in 2022. Considering the country has a corporate tax rate of 19%, the revenue can be estimated. So you can see that the revenue just multiplied by 5, right? 50 million in 2021 and about 110 million in 2022. So you can see that the amount of revenue income that these firms are raking in just from these prop firm challenges really a lot. And if you kind of like look at it from the other side of the coin, it means that this is how much money traders have invested in these challenges, right? During this period. It is really, really crazy stuff. Yeah. So anyway, let's move on and find out, why, most of these traders, fail the challenges. Now, let's have a look at their requirements, right? What it takes to pass these trading challenges. Okay, and the requirements kind of like differ from, firm to firm. So we'll start off with FTMO, I think one of the more popular ones. Let's say we go with, so you can see, right, the currency that you want to start with, the account size that you want to trade with, 10K up to 200K. And of course, right, if you go with the larger account size, the fee, right, in this case will go up accordingly, right? So maybe let's just put 100K. Okay, so I'll break it down to you, the requirements. I think FTMO is one of the more easier to understand one, pretty straightforward, right? So let's walk you through. So the trading period over here is unlimited. So it says that they want you to focus on to be able to focus on your trading performance, right? So we don't want to put you under unnecessary pressure, and therefore the trading period is completely unlimited. So maybe you can take a week, a month, 6 months. I have no idea. And one thing to also point out is that the trading period today, right, as I'm recording this video, is unlimited. But back then, if I'm not wrong, was like a month, a number of weeks. So it wasn't unlimited previously, but now they have actually made it unlimited. I'll explain why later why they did this, right? So the minimum trading days, again, this is quite straightforward. So basically, you must have at least 4 trading days, right, during your evaluation cycle, right? So yeah, at least place 4 trades over 4 different days. Trade for at least 4 days over the duration cycle. At least one position must be open on each of these days. A trading day is defined as a day when at least one trade is executed. If a trade is held over multiple days, only the day when the trade is executed is considered a trading day. So basically at least 4 trades over 4 days, right? Minimum, okay? Maximum daily loss, okay? So this one, I think this one's important. That's why they give you so much text over here. So let me kind of like break it down for you so you know what it means. So basically it says that, let's cover, section by section. Okay, this one here first. So this rule can be applied called a trader's daily stop loss. So back then when I was a prop trader, yeah, we also have a daily stop loss, right? Just to contain our risk. So according to our rules, this is set as a 5% from the initial account balance. The rules say that at any point or moment during the day, right? So they give you the time zone, right? The result of all closed position in sum with the current open PNL, right, must not hit the predetermined daily loss limit. Okay, so they give an example. Let's walk through the example. So for example, in the case of an FTMO challenge with the initial account balance of $200,000, the max daily loss is 10K. So simply 5% of 200,000, the max daily loss is $10,000. If you happen to lose $8,000 in your close trades, your account must not decline more than $2,000 this day. Makes sense, right? Because your max daily loss is 10K. Yeah. It must also not go negative 2,000 in your open floating losses. The limit is inclusive of commission and swap. So basically, every given day, you only can lose a maximum of 5% for a given day, taking into account both your closed trades and your open PNL. Okay, so of course things can get a little bit more complicated, right? So in this case, he says over here, especially when you have a open PNL that floats up and down. So if you profit $5,000 in one day, then you can afford to lose $15,000, yeah, because you have $5,000 extra buffer to work with, so you can lose $15,000. Because $15,000 you minus $5,000 is still within your that daily 10K loss limit, but not more than that. Once again, be reminded that your maximum daily loss counts your open trades as well. For example, if one day you have closed trades with a loss of $6,000, and then you open a new trade, the trade goes into a floating loss of $5,700, right? In this case, you already breach your daily loss limit because 6K plus 5,700 is a total loss of 11,700. That exceeds your daily loss limit of 10k over here, so that will be busted. So in this case, even if let's say your trade does end up positive, right, unfortunately it's already too late. In one moment your daily loss was 11,700, which is what I actually did over here on the equity, which is more than the permitted loss of 10k. So I think that is pretty straightforward as well. So another segment over here, this one. Okay, so this one over here, be careful as the maximum daily loss resets at midnight Central Time. Let's say that one day you had a profit of $4,000. On the same day, you have an open position which currently float at a loss of $13,000. This is still a lot because even though your floating loss is 13k, but you have an open profit of 4k. So in all, your total loss, right, is negative 9k, which is still within the acceptable range of 10k. On this day, the maximum daily loss is not violated. The current daily loss is $9,000, right? So the 4,000 close profit minus the 13,000 open position. However, if you hold this position with the open loss of 13,000 after midnight, then it resets, the daily loss limit will be violated because your previous day profit doesn't count to a new day, and the open loss of 13,000 exceeds the maximum permitted loss of 10k. Okay, so you can see over here, yeah, because this $4,000 close profit, right, is already exited. And when a new day reset, right, your this 13k, right, will roll over to the new day, and clearly that will hit your daily loss limit, and then, that's where you break the rule. Yeah, and the last part, the size of the maximum daily loss, give traders enough space for trading and guarantee a clearly defined daily risk to investor. Both the trader and investor benefit. Blah blah blah. Okay, I think hopefully this one here makes sense to you. The maximum daily loss limit, which is definitely essential, right? Even back then, as a prop trader, they have this in place just to make sure that no trader goes crazy, goes on tilt, and then cause the firm to lose a huge chunk of capital. So maximum loss. Okay, so this one is not maximum daily loss; it's a maximum loss. So I think all in all, this one is also very straightforward. It says that this rule, right, can be called the account stop loss. The equity of the trading account must not at any one time, right, decline below 90% of the initial account balance. So let's say you have 100k, meaning cannot drop below 90,000. So pretty much 10% or 90% of 100k is $90,000. So the account cannot go below $90,000 against the sum of both their open and close position. Okay, so basically, yeah, my Singlish is coming out. So basically, your maximum account loss is $10,000 or 10%, right, of your account size. Okay, account balance. Yeah, so maximum loss. Profit target, right? So in this case, it's 10k. So basically, you need to achieve a profit of 10%. 10%, right? So basically, if you start off with 100k, then it means that you need to hit a 10% profit target, which is $10,000. The profit target in FTMO challenge is set to 10% of the initial balance and 5% in the verification. So you can see that the verification, not sure what this means, right? So let me just reread again. The profit target in an FTMO challenge is set to 10% of the initial balance and 5% in the verification. So I think challenge comes first, and then the verification is stage 2. Yeah, a profit target means that a trader reaches a profit in the sum of closed positions on the assigned trading account anytime within the unlimited trading period. Also, please note that in order to proceed to the next phase, all positions must be closed. For example, if you trade FTMO challenge with a 100k account balance, your profit target is $10,000 in an FTMO challenge, and then $5,000 in the verification. Okay, that's quite straightforward. Okay, so basically this says how much you have to earn, right, in terms of profit. And then your refundable fee, yeah, blah, blah, blah. Okay, so if you look through the different brokers, it's a very similar wording, right? This one is, in this case, this is, what company is this? This is the 5%ers, right? So evaluation target, profit target, 10%, stop loss level, 6%, daily stop loss, 3%. So if you compare this to FTMO, this one is actually stricter, right? Quite a bit stricter, right? Because FTMO allows your daily stop loss to be, your max stop loss to be 10%, your daily loss to be 5%. So this one is stricter. If you look at the funded trader, again, if you look at this, you can just compare these details by yourself, right? And see which firm will give you the highest odds, right, of success, right? So I think what's intriguing was this is the program with the highest success rate in the industry. I'm not sure how they come up with this, right? Because apparently, according to the challenge, you can see that it's not the easiest one to pass, but still they have the highest success rate. So for me, I would think that the easier it is to pass a challenge, the higher your success rate will be. But clearly, this challenge is not the easiest to pass, but they somehow have the highest success rate in the industry. So yeah, that got me thinking. Okay. So also one thing to add is that previously I mentioned that these firms, right, like the trading period right now is unlimited. Back then it has like a time period like 20 days, 30 days, etc. Also back then, if I recall correctly, their for example, FTMO, right? Their maximum loss and profit target wasn't this arrangement. So if I recall correctly, back then their profit target could be $10,000, and their maximum loss wasn't 10K. It was a lot more stricter. It was like maybe 6K, 7K, or it was less than their profit target. So in other words, your maximum loss, right, is lesser than your profit target, right? But then, right, I think things change over time. Maybe if there's more competition, right, they're gonna make their challenge more attractive. So this is where they go relax with the rules, they make it less strict, right, to hopefully attract more traders to their challenge, right? So that's I think this is from a business standpoint. I think that makes more sense, right, to make the rules less stringent, less strict, so more people take up the challenge, and you can still make more money compared to slicing the challenge down to a lower fee where you're fighting on price. Yeah. Now, let me help you put things in perspective, right? So you know how difficult these challenges are. So, profit target 10,000 out of a 100K account. So assume, let's say, you're asking for a 10% profit target, and your maximum loss, right? Let's call it your maximum drawdown, is also 10% of your initial account size. Okay. Now, what are some of the best hedge funds in the world, right? Managing, a huge ton of money. What is their track record like? So let me share with you this firm, right, called Trend. They have about $5 billion under management. Okay, have been in business for the last 30 plus years. Do you think they will be able to pass the challenge? Well, here is their results over here. You can see over here, their annualized return is about 10.63% a year. Their maximum drawdown, the deepest drawdown, is 20.11%. So if with this track record, they were to go and take part the trading challenge, guess what? They will fail miserably. Right? They will fail miserably. So this should then make you realize that, yeah, you can be a profitable trader. You can be some of the best hedge funds in the world, running a trading system for decades, but you still fail the trading challenge. So this is why, if you think back earlier, right, the passing rate of the trading challenge was like less than 1%, because you can be a profitable trader in the long run, but you still fail the challenge, because that's how strict the requirements actually is now that you put things in perspective. Okay, this is again Trend. Again, the track record is out there for the public to see. And again, some of you might argue, because it's a trend following system, right? A drawdown is usually deeper, right? So this is actually one of my own trading system. It's a mean reversion trading system that I use to trade in the live markets. Again, this is the results of it since 2000, over the last 20 plus years. Annual return, this one is about 19.56%. Maximum drawdown is 32%. Again, it will fail the trading challenge, right? And this is how the equity curve look like. And yes, it will fail all of this prop firm trading challenge because it doesn't meet the requirements. Okay, so this is just one thing to also note that this trading system trades on a daily time frame. Trend is a strategy that I believe also adopts trading off the daily time frame, the higher time frame. So for this prop firm challenges, they probably cater to the shorter term time frame traders, maybe minutes, scalpers, short-term traders, etc. Right? And those group of traders, they probably can have a lower drawdown, a better risk-adjusted return, but still, it is done difficult. Okay, now some of you might be wondering, so Rayner, is this a scam? So here's my answer, right? No, it's not a scam, because they do pay out. They do pay out profitable traders, right? It's what you've seen earlier on FTMO website, right? They actually do pay out their traders. And if you think about this, they make so much money from this evaluation. Okay, that's where the bulk of their revenue come from. And if they don't want to pay out traders when these traders deserve to be paid out, then guess what? It's going to be bad for business. So they're trying to save that few cents, right? Just to have a bigger bottom line. And by scrimping and saving on that few cents that you're supposed to pay out to traders, you end up getting bad reviews online, and which is going to hurt your business overall, which doesn't make financial business sense to me. So most of these firms, I believe, they do genuinely pay out traders, right, when traders have earned their right for a profit share. But at the same time, right, I want you to know that, to understand what you're getting involved with. Number one, you're trading on a fictitious account, a demo account. Number two, there's this element of conflict of interest, which again may or may not matter to some traders. Some trader will think, man, Rayner, who cares if it's conflict of interest, man? As long as they pay me when I deserve, I'm okay with it. And if that's you, fair enough, right? But at the same time, there are a certain group of traders who, doesn't resonate with this conflict of interest, where the more they fail, the more profit the firm earns. And at the same time, also understand the requirements. Really live and breathe, right, the requirements that is ask of you, and I've just shared with you earlier, the requirements are tough. They are not easy to meet, especially if, let's say, you're a trader who trade off the daily time frame, the weekly time frame. I will almost guarantee that you will not pass the challenge, because it's very hard to find a profitable trading system that trades off the daily time frame, the weekly time frame, to meet those requirements that they have. Right? I mean, of course, if you can do it, better to you. Yeah. So next question is this: who is this for? So this will be for traders, right, who are, let's say, low on capital, but they know that they can trade the market. So let's say you have a 6 months of track record that meets the trading challenge requirements, and you don't just meet the challenge requirements for 1 month. No, every of that 6 months you can meet that trading challenge requirement. Then hey, this is something that you can consider, because they will give you access to capital to trade, a larger pool of capital to trade, right, by just paying that fee, right, for that trading challenge. So again, you have to be really confident of your own trading abilities. You have to know that the challenge, the requirements, yes, you can meet it every single month, and you've done so for the last 6 months. Then hey, this is something that you can consider. Okay, mistakes to avoid. Number 1, don't pay people to take your test. Right, there are certain firms out there that they say, hey, guess what? You pay us a small amount of money, right? We will help you pass the test. It doesn't make sense, right? If you think about this is like paying people to take for you your driving exam. Okay, maybe you can pass the driving exam, but when you go to the real world, you're gonna crash and burn, and your own life is at stake. So why would you want to pay people to take the test for you? Right? You don't have what it takes to trade the live account, so trying to fake your way in is not really going to help you as a trader, unless you are doing it in mind that, okay, I passed the test, now let me go big and go home. If I'm lucky, I get a winning trade, I get a payout, it can easily cover the cost of my trading challenge. If that's your train of thought, if that's your line of thought, then okay, right, fair enough. Yeah, but otherwise, doesn't just make sense to pay people to take your test. Number 2, right, don't go with a fun and pray approach. Some people just keep funding all this trading challenge and then pray that they pass the challenge. It doesn't make sense, because guess what? Even if you pass the challenge, right, let's say the next month you fail, it's going back to zero again. You need to retake or take a reset or pay money to, get started all over again. So don't go with this fun and pray approach. In fact, I just saw this online where someone took many trading challenges. You can see over here. I got robbed of my trading account, funded account. Finally, after purchasing 15, 16 accounts and spending close to $10,000, I was able to pass my challenge and I got to the funded stage. But after 2 days, right, I think he claims that he was copy trading, his account got terminated, blah blah blah. So the point here I'm trying to share is that don't spend so much money with the hopes of passing a trading challenge, because right, passing the challenge is one thing. After you pass the challenge, after you get a live account, or rather a demo account which offer you a profit share if you make it, the rules are still in place. The rules doesn't become relaxed suddenly the moment you become a verified trader. No, the rules are still in place, okay? So this brings me to my third point, which is this. Passing a challenge don't mean a thing. It's just like having a green month in a trading year don't mean a thing, right? If the remaining 11 months of the year is losing money. So same thing, you can pass the challenge once, it doesn't mean a thing, right? Because if you break the rules, sometime down in the future, right, you probably have additional costs to pay to retake the challenge. I don't know what's the arrangement, but yeah, passing one challenge really doesn't mean a thing. Doesn't mean that you're a profitable trader. Doesn't mean that you're a good trader. And likewise, just because you fail to meet a challenge doesn't mean that you're a lousy trader, because the requirements, as I shared with you, is pretty darn strict. Yeah, I've shared with you, firms, hedge funds who have been in business for the last 30 years, they would have failed the challenge as well. But guess what? They're managing $5 billion today, right? So really, right, hopefully this video gives you an insight to the world of prop firm challenges, mistakes to avoid, and give you a clearer perspective, right? So with that said, I think I've, talked long enough. I wish you good luck, good trading, stay safe, and I will talk to you soon. And oh, by the way, if there's any other topics that you would like me to cover, you like my opinion on, leave it in the comment section below. I'll have a read at it, and if something that, intrigued me and something that, hey, maybe I can cover, I'll do so, yeah? So with that said, I'll talk to you soon.